absolutely amazing question from Jignesh here. Let me bring it up. What are some of the most commonly overlooked tax deductions, and would restructuring your business, such as operating as a sole trader, company, or trust, provide access to better tax benefits, or are tax deductions generally the same across these structures? Very, very well thought out question. Now, most business owners are paying way too much in taxes, okay? Just because they don't know what are tax deductibles and what are not. If you don't have a accountant and a lawyer helping you in deciding which what, right? It's hard by yourself. And even worse, well, that's a notification. And even worse, some business owners are operating on the wrong business structure, right? Some are operating as sole traders when they should be operating as an LLC. So we'll get into that as well, because like depending on the company structure, you could be saving a lot more in terms of taxes. Anyways, first one, home office deduction. Okay, you can deduct a portion of your rent, utilities, and internet bill if you work from home. Now, the caveat is if you're a sole trader or running a trust, you can usually claim these deductions directly. How it works is that you can either have a direct method, which is like 67 cents an hour, or you use how much of your home is getting used as a office. So let's say 10-20% of your house is getting used as a home office, and then that 20% can be then taken off from the rent or mortgage interest, utilities, or internet bills. Now, if you operate your business under a company structure, then it gets a little bit trickier because you can't just work from home as a company, right? The company has to formally pay you rent to use the home office, and this creates extra paperwork, which is unnecessary. The next one is startup costs. Any market research, legal fees, or branding that you do before you even start your business are tax deductibles. This applies no matter the structure. Okay. So if you're a sole trader, if you're operating under a trust, if you have an LLC, all it doesn't matter what structure you're operating under, it all counts as tax or business expense. So they're tax deductibles. The next one is education and training. Any education or training that you do for your business, okay, anything that's related to your business, whether that's coaching calls, I don't know, professional development meetings, right? Books that you buy that can help you increase your sales skills. Anything that is related to your business counts as business expense, okay? Which means they are tax deductibles. Number 4 is marketing and advertising. Any costs that you spend to, I don't know, market on Facebook, TikTok, Instagram, Google ads, right? Email marketing, paying for subscription fees that sends out automated emails. All of that qualifies as business expense and therefore are tax deductibles. And if you're operating as a company, you may have a marketing team, which means that the marketing team's salary can be written off as a loss because, well, you're paying them. Number 5, business travel and meals. Obviously, I've already explained that in the previous one, right? Any time you go on a business meeting that maybe like overstate, right? The flight, hotel, and potentially the meal that you enjoy are all tax deductibles. They're business related, right? The flight is business related because you have to fly there. The hotel is business related because you have to stay there to join the meeting. And the meals are necessary because you have to fly there, and then you have to, buy the meals when you could have cooked from home for less. If your business is structured as a company, you can usually write off meals more easily than sole traders because you can say that you're having a business meeting with clients or something. Sole traders have stricter limits. The reason why sole traders have stricter limits is because usually their business expense and personal expense are very, very intertwined, right? It's hard to distinguish what is what. So this is where a good accountant comes in. Number six is subscription and memberships. So if you have a Canva membership, if you have FileNote membership, even memberships to industry groups, it doesn't matter. As long as you have a subscription fee or membership that you use and that you pay to operate your business smoother, it is a business expense, which means it's a tax deductible. Number seven, depreciation on assets. If you bought a business laptop, business car, or I don't know, even a camera for the business, you can write off the depreciation over time. So, number eight, bad debt. If a client never pays, well, I mean, you can write that off, right, as a loss because you put in so much work to help the client, but they just ghost you. They don't respond to your emails. They don't respond to your calls. They don't respond to your texts. They don't even click the payment link to check it out. So if a client never pays and you do the work and then, the work goes nowhere, it's a loss. So you can write that off. Number 10, legal and professional fees. A lot of companies need lawyers and accountants. Number 9, insurance premiums, like a business liability insurance, a cybersecurity insurance, even a personal health experience. Like, for example, if you're running a company, you pay for your employees' health insurance, gym, whatever it is. So oftentimes, those are also tax deductibles. So now let's get into the different business structures and their tax benefits. Sole trader. Easy to set up, can deduct business expenses, but you're taxed at personal rates. Up to 45% if you earn over 190K, right? That is crazy. So if you're a sole trader earning a decent chunk of change, then you may want to consider switching to a LLC because you're going to save a lot more in terms of taxes, right? 25% taxes compared to 45. So if you're a sole trader and you're earning a lot, you may consider wanting to switch it up. All right, a company. So lower tax rate, a flat 25% to 30% tax. You can claim salaries, employee benefits, and more as tax deductions. And number 3, asset protection. Because let's say a family hires out a landscaper from a landscaping company. The landscaping company sends out the landscaper. All right, the landscaper absolutely messes up on the job, ruins the landscaping, and then the family loses 20 grand. Wants to sue the person that did the landscaping, but they can't, right? They're not allowed to do that because they contracted the landscaping company instead of the landscaper himself, which means that they have to sue the company. But then because he fucked up and then he declared for bankruptcy, right? Let's say he declared for bankruptcy, the landscaper. There is no more. What are you going to do? You're going to sue a bankrupt company? So that's what I mean. You get pretty good protection for operating as a company. Trust the benefits. Number 1, distribute income for lower tax rates. Right? What I mean by that, let's say you're operating as a sole trader and you have a business that brings in over $300,000 in profit. Okay. Now, usually you'll be taxed at 45%, and I'm not going to do the math, but it's a lot of tax that you have to pay. Now, if you had that business inside of a trust that has 4 beneficiaries, you can split that 300K to the 4, which means, let's do some math, 75K. Okay? Each person gets 75K. Now, that 75K would be taxed at their individual income tax bracket, which means it's so much less than the 45%. Okay? So you'll save a lot more in terms of taxes. And number 2, strong asset protection benefits, but it's just more complex to set up. So if you want me to elaborate more on trust, let me know and I'll do a separate video on it. If you establish an offshore company as a online business owner, not only do you get 3% corporate tax, you also get 0% capital gains tax, you get insane value in terms of asset protection and privacy because LeBron just entirely ignores court orders, right? Foreign court orders are thrown out the window because they're just treated as paper. And then LeBron just doesn't leave any paper trails in terms of who owns the company. So, what does that mean? It means your business is entirely anonymous, right? No one knows who owns what, except for the authority, obviously. The one thing, though, is that it requires proper structuring in order to work. That's why you need a lawyer that is well connected in LeBron in order for this to work. But the tax savings are worth it. So here's the deal. Sole traders pay more tax and have a lot less benefits. Companies pay less tax and get better deductions, but comes with more paperwork. Trusts are great for distributing income and protecting assets. Offshore structures like a LeBron company can reduce your tax all the way to 3 and potentially 0, but it costs a lot more upfront to establish. If you're serious about keeping more of your money, the first step is to choose the right structure. And if you need to figure out what structure is best for you, send me a message and I'll get in touch with you.